What? All right. Look, amidst all this intense pullback we had last week, Friday, before that G20 meeting, there's one thing that stood out, man, is they did not all feel the positive effects of whatever was driving this. And I've been noticing that the Australian 200, that market, that index is not behaving super healthy. So if I would compare it to the other indexes, especially the SPX, it's underperforming it after a series of highs right here, 12-month average going downwards. And instead of having a doji or a spinning top right here, indecision in the market, like these candles, it's actually the bears are still pretty much in control in November. With some buying coming in to close above that monthly defined breakdown line here. Let's draw that line in the sand. Zoom, zoom, zoom. Oh man, barely. Maybe too close. We have to give it a not convincing enough. It would be a Marubozu candle and closing with no buyer pressure, a little bit or just a little bit more below that breakdown line. I'd say okay. But right now, what did break down is we had a close below this closer defined support. In October, went through both of these levels. Price action came back up. Okay, push. November, lots of volatility. Price action getting all the way back close up to the 12-month moving average. Going down below. So it's actually closed below. So this support has failed. We're actually testing now this 1, 2, 3, 4, 5. Like 4 months, 5 months in a row. This has been tested. This should be the do or die. Full meltdown. Breakdown line, guys. So if I base that for my applied measure move, that is insane, guys. We're going to go all the way back down to, I shouldn't use words insane, it's just applied measure move. Go back down to these 2016 lows right here. Where here could have some congestion here along the way. I always try to look at when I see multiple months. Oh, try to go out, resistance. Oh, tried. And then when you break out of those levels, well, that support now is become, that resistance has now become support. So we might have some congestion here along the way. How do I visualize that? Well, I could expect pullbacks. It helps me understand what could happen. A bounce back there. Then I have my 12-month average. The more the price action stays below, keeps going down, declining. And then after that, I could expect to bounce back up to this important support and outturn resistance. And then we go back down. And then I look at the other levels right here. Natural support right here, which also has been previous resistance or support. That's how I identify these possible levels where I could get bounces, guys. Right here. And after that, we could get a bounce back there, back to 12-month average. And every time you had a bounce, well, yeah, it's a chance that you actually go back into a stage 1. And after that, eventually maybe a reversal and going back up. You never know if that bounce is going to be that simple pullback and then continuation breakdown, or if it's going to be reversal. But you do know that if the trend is in your favor, you have augmented chances that pullback is going to be a simple pullback and not a reversal, until you start having price action that goes close towards the 12-month average, until the price action actually goes above and closes right here above 12-month average. Until you get to that scenario, don't fight it. It's a downtrend. Pullbacks should be played as continuation shorts. Just as if I'd flip the chart, it'd be complete opposite. This would be, trading view, flip. This would be the same thing. You'd play this as a continuation. You'd see this as a breakout, and then after that, pullbacks would be as continuation breakouts. Love the flipped reverse chart, man. Remove the bias. Oh no, it can't go down. Flip the chart. If you say, oh, it's going up, cool, I love it, then it's the same thing. You could be playing the chart downwards. So that's the implied measure move, guys, all the way back down here. And after that, that's going to make a bigger pattern, and a bigger pattern if it fails. Then you have a crazier target. We're not there yet. Don't let the chart, the parameters of the chart, the boundaries influence where this could go. You could say, oh, this is a top, it has to go down. I could easily move the chart here and say, oh no, look, it looks like a bottom. And not because you see here, it can't go lower than here. That move's too big. Check it out. When I zoom it out, you'll see what I mean. So this, if ever the price action goes back down, all the way back down here. Oh, what happened here? Inverse. Okay. Check it out. So targets, implied measure moves, brings a price action to certain zones. After that, there's volatility. So that target here brings me back down here. Might have some play here. Important monthly defined support. Head and shoulders. Is there missing just another top here? Who knows? Could expect a big bounce here. But look at that. That'd be my implied measure move. And is it that big? Well, not really, guys, because that's going to bring us back down. We've already had lows like this. And I love the symmetry of this implied measure move. It brings me back down all the way here. Pinpoint accuracy. This is not unknown territory. We've been here before, 10 years ago. So this is all possible. Just like sometimes we overcome and we re-reach previous highs 5-10 years later. There's no reason why you can't go and reach previous lows, guys. So that'd be the monster top right here. If ever this pans out, this small move, and just looking at that, say, oh man, that's huge. That's a huge move. Well, taking into context, taking a step back, you see that this move here is just the beginning. It's like the embryonic breakdown on monthly candle chart. Just like stage 2 when I was looking at breakouts, you had embryonic breakout. Then after that, you had a pullback. Then you had another one, and then after that, the moving average really started inclining into your favor, and then you really got the momentum. Well, this pattern, if it breaks down, that 12-month average it's going to start really looking like this, and then you'll have that full momentum behind you. And then you hit your challenges, you hit those monthly defined supports, and if it persists and it zigzags all the way down, and it keeps going down, then after that, you just get to another stage, another area where the chart is morphed, you reevaluate, and use your imagination, guys. But a logical imagination based on support, based on potential resistance, potential support, where the bounces could happen, where the moving average is, and then you know that you shouldn't be in the stock if the price action is below the 12-month average, and you shouldn't short a stock if the price is above the 12-month average. With these guidelines, let your imagination roam free, and use good risk and money management, huge stage analysis to make sure that you don't get chopped, that you really are with the trend, guys. So what could happen here? Even if I really want to go in a crazy hypothesis, and this could be years later, right? Because these are monthly candles. Go back down here, and that's support. Maybe it's going to hit harder, and maybe after that, another bounce back up, challenge the previous highs, not quite make it, and then boo, timber, all the way back down here. So this would be the 12-month average, would be a fake out or a small stage 2 on the 12-month average, and after that down. So that's a long game plan, long game plan. Everything could change. The price action decides to not go down anymore, close above. Whenever you beat a previous high, you invalidate pretty much the bearish scenario. So as long as you keep making higher highs, and if ever the price action decide not to go, not beat those previous lows right here, and actually the price action decide to go back up, and you made a previous high, then all this scenario, all this stage 4 disaster, this meltdown, it's out the window until The price action tells you that, okay, this is a possibility. That's how it's constructing. That's how it could go down. So the ultimate bearish scenario on the monthly candle chart, multi-year, is actually a close below that previous low here, that 2015 low, 2016 low. And if actually you get a close below that, then it's not higher highs anymore, it's lower lows, and that is a downtrend. And by that time, you'll have that 12-month moving average really gaining steam. And even here, if it bounces back up, goes back up, and then you're starting to set in lower lows, that's a top pressure. And as soon as you bust, putting pressure on the on that support, and as soon as you bust it, then you're in descending channel. So you're gonna have a morph from having what's gonna look like a triangle, lower highs, but you still haven't beaten those lower lows. So then instead of just being a triangle here when the price action is right close testing that support line, and if let's say it busts it, then after that you're actually starting to be in a descending channel, guys. Lower lows, lower highs, lower lows. And that's how chart morphs, guys. It morphs, doesn't need much. You gotta really adapt. Opinions are great, have fun, but I change my opinions all the time. Don't hold it against me. That's why risk and money management is there. If the scenario changes, then you minimize the damage, get out. But I need to imagine what's gonna happen, and it helps me stay in the trade. In those staircases move with crazy volatility or just movement, it helps me stay true to the system. If I know that was the expected or potentially expected movement, guys. People say, the target's here, it's at 4,900. Well, and then in their brain can't imagine this fluctuation. It's so weird because this is human emotions, ups and downs, people buying at different times. But people, when they imagine target, I'm buying here, my sell stops here, here's my profit. They see a straight line. And if anything deviates from that, price action goes back up against them. It's not working. But it's not the fact that the price action goes back above that your plan's not working. It's you have to make sure that all the criteria to exit tell you that the plan is not working. Trendline violations, previous highs overturned, your sell stop breach, moving average violated. Those are the action plans, the actions in your plan that's going to tell you if the trade is time to bail or not. Not the fact that it's actually moving. It's supposed to move up and down. Woo! All right. Move all drawing tools. So that's on the monthly, guys. It's not looking super duper for our next leg down. Close of December is going to tell the truth for the Australian market. Let's zoom in. Always zoom in. Do the weekly Stan Weinstein. Underperforming this SPX. And after that, it's starting to go down. And look at that. It did not do super well. Actually, the sellers came in and brought it down. Instead of compared to the other ones, which you had the SPX. Actually, look at that green candle going upwards. The Australian 200 did not want to do that. So now you're below the Ichimoku cloud. You're in the red. Mansfield relative strength. That means the 30-week average is declining. And now this just looks like a sideways pattern. Bring you closer to the 30-week moving average. Man, that pullback could have been some weekly defined. That pullback here could have been the good risk to reward entry right here. Kind of far a little bit maybe from 30-week average. I don't know if we're going to get another chance. Here it would be awesome. If it's on contracting volume, especially, that's going to tell us the weakness, that the buyers aren't convincing, is just floating back up because there's less selling pressure, and then could keep going down. All right. So I don't know why. Does it really matter? The price action is telling you that the Australian 200 is suffering. It's not reacting super good. We'll have to wait to see how it unfolds, how that support could kick in and maybe give us a bounce up. So it could probably enter at a better area, guys. Okay, that's it for me. See ya, Australia. Ciao.